Hey, what's going on YouTube? Welcome back. It's Travis here with JT Wealth. In today's video, we're going to be talking about 3 stocks that Warren Buffett's Berkshire Hathaway owns because of their monstrous free cash flow and how you can use the same 3 stocks to increase your free cash flow. So let's get into it. All right, like I said, welcome back. Thanks so much for checking out today's video. Hopefully you find some value in it, and if you do, hit that big thumbs up for me. Also, if you're new to the channel, consider subscribing and stay up to date with all of our new videos here. All right, and we're going to talk about 3 stocks that Berkshire Hathaway owns. Of course, that's Warren Buffett's big company, right? And those 3 companies are purchased by Berkshire because Warren said, hey, they have a huge cash flow issue. And that's a good thing. They compare it to basically their sales. So it's free cash flow as a percentage of sales, right? But for us, that cash flow comes in the form of dividends, stock buybacks, and the company growing organically so that your share price increases incrementally. Also, all 3 of these stocks have done exceedingly well, even during the hard times we've had in the last 2 years. Now, you might be saying, hey, we're at all-time highs. It's not exactly hard times in the last couple of years. I really only say that because a lot of dividend-paying companies did stop paying dividends throughout the pandemic. None of these 3 companies did that, so they're very strong companies. All right, but jumping right into it, this article came from MoneyWise, and it says Warren Buffett is holding these stocks for monstrous free cash flow and why you should too. The article goes on to talk about Wall Street paying attention to earnings and how earnings can be manipulated. Even fraudulent manipulation occurs. So basically, as a risk-averse investor, somebody who's looking to create free cash flow or passive income, like we call it here, these are the types of stocks you want to be looking for. Stocks that produce cold, hard, real cash to its shareholders. And they do that again through dividends, repurchasing shares, and growing the business organically so that your stock price goes up, making you money. And investing legend and Berkshire Hathaway CEO Warren Buffett is famous for his love of cash flow producing businesses. And if you take a look at these 3 stocks in that portfolio, they boast double-digit free cash flow margins. And again, that is the free cash flow as a percentage of sales. So one or all of these could be great stocks for you to pick up, whether you're buying a full share or just partial shares. You know, these are just fantastic companies. All right, number 1 on the list for today, Chevron. Ticker symbol CVX. Chevron's leading off the list. It's an oil and gas giant. They generated $11.3 billion in just free cash flow over the past 12 months and have consistently posted free cash flow margins in the ballpark of 10%. Now, the shares have rallied in recent months on the strong rebound in energy prices, but long-term investors might still want to have a look. So management's recent initiatives to cut costs and improve efficiency are starting to take hold and should be able to fuel shareholder-friendly actions for the foreseeable future. Now, in the most recent quarter, Chevron announced it would reinstate its annual buyback program due to a combination of improved operational performance and lower spending. And despite the run-up, Chevron shares still offer an attractive dividend yield of 4.9%, higher than that of their rivals BP and ConocoPhillips. Taking a look at Chevron stock on the TipRank site just to see what the analysts say to look at that price target, we're looking at a moderate buy stock with 13 analysts rating it. 7 buys, 6 hold, but 0 sells, guys. It's trading at 112.28 earlier this afternoon and has an over 10% upside to $124 in the next 12 months. So this, again, fantastic opportunity to get a 10% upside on the growth of the stock while receiving an almost 5% dividend yield. All right, the next stock we're going to talk about is a company with triple the free cash flow of even Chevron, guys, and that's Moodys. Ticker symbol MCO, Moodys comes in with a whopping free cash flow margin above 30%, and the credit rating leader is number 2 on our list. Now, Moodys doesn't have a huge dividend, but it is strong at 0.66%, and they did not miss a payment through the last 2 years. But aside from that, their shares performed very well during the pandemic. They're up 65% in the last 2 years, suggesting this is basically a recession-proof business. Moody's has generated about $2.2 billion in the trailing 12 months as far as their free cash flow goes. And over the first half of 2021, the company has returned $735 million to shareholders through their share repurchases and dividends. Looking at the tip rank screen, MCO is trading at about $373.51 today. If that's a pricey stock for you, remember there are fractional shares available. You don't have to buy this all at once. You could buy $100 at a time if that's what suits your fancy. It has 11 ratings, giving it a moderate buy with 6 buys, 5 holds, and again 0 sells, but almost 9% potential upside in the next 12 months to a price target of over $406. Number 3 on our list, and splitting the middle between Chevron and Moody's at 20% free cash flow, that company is Coca-Cola. So number 3, in rounding out our list, Coca-Cola produced $8.8 billion in free cash flow in the last 12 months and habitually delivers free cash flow margins over 20%. And the stock has been sluggish over the last few months, but I think that's a good thing. This provides long-term investors with a really enticing entry point, guys. We're buying on the dip here with Coca-Cola. If you're a long-term investment, your case continues to be backed by an unrivaled brand presence, massive scale efficiencies, and a still attractive geographic growth tailwind. And the company is back to operating at pre-pandemic levels. As shown by the most recent quarter, they posted revenue of $10.1 billion, up from the same period in 2019 and driven largely by an 18% jump in global unit case volume. They offer a dividend yield of 3.1%, which yes is higher than Pepsi and Constellation brands. Coca-Cola, trading at $54.65, also has the highest upside of the 3 we're looking at today. $61.86 is a price target in the next 12 months, which is over 13% upside potential. They've got a moderate buy, 14 ratings, again holding true to the 0 sell that we're looking at as far as our 3 stocks today, 8 buys and 6 holds. So if you're looking for stocks that'll create passive income for you via dividends, share repurchases, and just growing that stock value incrementally over time, even through pandemic issues, these are the types of companies that the really smart money, the Berkshire Hathaways, the Warren Buffetts, go to make their millions and billions of dollars. So far be it for me to say these aren't strong companies, right? I just go find what the bosses say, and if it fits, it fits. But anyways, guys, check out these 3 stocks on your own. Do your own due diligence. I'm just providing this as information and entertainment purposes only. I'm not telling you to buy or sell any stock, as I'm not a financial advisor. But hopefully you found some value in today's video. If you did, smash the like button for me. Consider subscribing to the channel. And until next time, bottoms up.